Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and let's shift focus on mid-cap funds. The mid-cap space has recently outperformed benchmark indices, and the outperformance may continue going ahead. So, what are the top 5 mid-cap funds and what are their strategies? Let's discuss all of this with Gautam Kalia, Senior Vice President and Head Super Investor, Sharekhan by BNP Paribas. Gautam, good evening. Welcome to the show. And it seems you have top 5 mid-cap master stroke funds to suggest to our viewers. So let's begin. 5 funds and the fund managers and the kind of strategies they've adopted. But before that, let's just talk about the performance right now that we are seeing in this space. Okay, I don't want to talk. So we usually mix up mid-cap and small cap, but this is specifically mid-cap we're talking about. Are the valuations really attractive? There's more steam left for a couple of months. We will still see valuations going up.
Yeah, so Kavita, thank you for having me on the show. So yes, definitely when we look at sentiment, we look at consensus estimates. Everyone is talking that there is definitely still more uptick expected, and there is a lot of momentum. There are a lot of flows coming in, so that is obviously helping grow that space and grow the prices also, because all of that is finally coming into the mid cap space also. Having said that, valuation is a relative game. So relatively speaking, obviously now we are getting into that gradually rich value territory, but we are still not. I would say historically speaking, we are still not anywhere near the peak. So there's still a while to go. And we have to keep in mind that over the last 5 years, the mid-cap space has delivered about 15% CAGR, which is not, I would say, not significantly high. It's only in the last 1 year or 3 years where you've seen, the returns really shoot up. So the 3-year return is actually about 30%, 30 to 35% in that space. So that's really where the rally has taken place. Obviously, when we talk to our clients, we talk more about 5-year and plus views, especially because mid-cap is more volatile space.
All right. Let's talk about the funds that you've listed out for us, and which is your first recommendation and why?
Sure. So I'll just first like to talk about what do I mean by top funds, because top can mean different things to different people. You can just download and look at the top performing funds for the last 1 year or 6 months or 5 years, whatever time period, and you can decide that this is the top. But at Sharekhan, we have a process. So we have a scheme selection and research process, and basis that process, we have created this list. And it takes into account not just past performance, but also current portfolio positioning, who the fund managers are, what is their investment process. So that there's a lot of things that go into selecting these funds and kind of calling them that these are our picks for the next 3 to 5 years for our clients. And obviously it's something that is evolving on a monthly basis. We keep updating this list. So having said that, and having got that out of the way, making sure that everyone's on the same page, I'd like to talk about SBI Magnum Midcap Fund. So it's about a 10,000 crore AUM fund. Sohini Andani is the fund manager, and the fund's done reasonably well over a 5-year period. What I want to say is that the fund manager is also managing the mutual fund for SBI here. The style is actually a growth and value blend, the style of investing in the fund. I'm looking at the details right now, and it's got about 60 stocks in its portfolio, and it is built with holding them over a long-term period. So that kind of aligns with I would say with the investor view and mindset, who's anyway supposed to get into mutual fund to kind of build portfolio for the long term. Currently, when we look at the sector allocation, it's overweight on automobile and auto components, textiles and capital goods sectors, and it's currently underweight on financial services, IT and healthcare. So this is one of the funds that we believe should be in the portfolio, especially when we are talking about mid-cap allocation.
All right, so that's all in the mid-cap space that you are recommending, and you've also highlighted the reason.
Yeah.
Uh,
So there are other funds
sure.
also which I can cover now. Should I?
Yeah. Please go on.
Okay,
Yeah.
great. Yeah. So sorry, I thought we were going one fund at a time.
Yeah.
So then we have Nippon India Growth Fund, again a 15,000 crore fund. It's got four fund managers. One of them also manages the small cap fund, which is done well. That one has a focus on like four verticals of the Indian economy, where it's focusing on like a consumer discretionary, healthcare, financials, and companies that basically work on outsourced business from global corporations. Then the other fund that we are talking about is Edelweiss Midcap Fund, which has a 3,000 crore AUM, roughly around that much. Mr. Bhattacharya and Sahil Shah are the fund managers there. They manage other funds as well of within Edelweiss, and there they are overweight on capital goods, construction material, and chemicals, while they are underweight financial sector, healthcare, and power. Then the last two funds are Kotak Emerging Equity Fund and Mirae Asset Midcap Fund. So this will, comprise the five funds we are talking about. So Kotak Emerging Equity is about 28,000 crores. Mr. Pankaj Tibrewal is managing it. He's got over 17 years of experience. He also looks at the small cap space, Kotak Small Cap Fund, and the Kotak Equity Hybrid Fund he manages. They focus on stock selection through companies that have high entry barriers, high return on capital. They focus on a strong management and business franchise, and they are currently overweight. Portfolios positioned where they are overweight on consumer durables, capital goods, and chemicals. You'll see that this is a similar refrain in some of the other funds as well. Mere Asset Midcap, like I said, Mr. Ankit Jain looks at that about 10,000 crores is the size of the fund. And there, again, consumer durables, capital goods, and services sector is where the fund is overweight. So these are the five funds that really we are talking about with our clients and telling them to look at as part of their mid-cap allocation.
All right, I think we will take more questions on this space, but then we have our viewer already connected with us on the phone
Okay.
line, and let's begin with those the question answer round. We have Valsan from Kannur. Hi, good evening. How are you doing?
I am okay. I am fine. How are you?
I'm doing good, sir. Thank you so much for
Yeah.
sending us your portfolio. I can see you
Okay.
have 15 mutual funds in your portfolio.
Yeah, that is only that is SIP. Some fund is different. That I have something else. Now I have the query regarding this SIP. 15 SIPs are there.
Okay. Yeah.
Can,
Okay.
can
Okay.
I
Sure.
can I reduce the number of funds? That's what my query.
All right, sir. Sir, I just wanted to
Yeah.
know since how long you've been investing in mutual funds because you seem to be having a very large portfolio where SIP funds are different and lump sum funds are different, I believe.
Yeah, different. I've been in with the mutual fund for the last 7-8 years.
7, 8 years. And you've built up a
Yeah.
retirement corpus only through mutual fund investments?
No. I have some some bank FDs are there, mutual funds are there, different varieties of schemes are there.
All right. I want to understand you don't really need any regular income from these funds, right? Or are you using it as a part of your regular income?
I am not taking any regular income from mutual fund. I am taking the regular income from different assets. Yeah.
Got it. All right. So we will help you filter out this portfolio. Gotham?
Yes. So, hi, Mr. Wilson. Congratulations for staying invested for 6, 7 years. That's good to know. A couple of comments at the beginning that you got a lot of schemes, obviously, which is it. And second, I see a lot of sectoral and thematic exposure, which I believe is maybe unnecessary risk that you don't need to carry. That's something that you'll have to decide. I'm going basis the information I have, and I've got your age at 72, I would say that there's no need to take that additional risk, but I would leave that decision to you. When it comes to the schemes themselves, what I'll say is that there are some schemes that are quite good, so you should continue with them. A couple of places where I would say, in terms of allocation, you can change the allocation to kind of make the overall portfolio less volatile. So, for example, you've got Canada emerging equities, so you can look to shift that to HDFC Balance Advantage Balance Advantage is a combination. It's a multi-asset product, so it'll reduce the overall volatility. The second is you got Canada Small Cap. Maybe you can look at moving that to Canada Robeco Blue Chip Fund. So that's moving from a small cap space to the large cap space. Again, talking about bringing in a little bit more stability. Canada Focused Equity, which again is a concentrated portfolio. Not sure whether you need that. That you can look to shift to an HDFC FlexiCap, where you'll have a broad-based portfolio. And you can also add SBI multi-cap allocation which you have into the HDFC FlexiCap there, so that way you're reducing funds. And finally, the major chunk where you should look to reduce is the SBI Healthcare Opportunity, Kotak Banking and Financial Fund, the Kotak Manufacture India Fund. These three schemes are sectoral and thematic in nature. Maybe you can look to move these to existing balance, the dynamic asset allocation schemes, like you have SBI Balanced Advantage and HDFC Balanced Advantage. So you can move the money instead into these schemes, which are, I would say, will reduce the overall volatility. It will reduce expected returns also, but I think that's, my assessment is you're not looking to really maximize returns, you're looking for more stability.
All right, we have next viewer, Prasad from Bangalore. Hi, Prasad.
Hello.
Hi, good evening. How are you doing?
Yeah, good evening, madam. Thank you. I'm fine. Actually, my name is Prasad.
Okay.
I'm calling from Bangalore, some rural area, interior area.
Okay.
Okay. Not in Bangalore.
Okay.
Hello.
Yeah, I can hear you. Go on.
Yes, madam. I'm investing Axis Blue Chip Fund.
Sure. Okay.
Since from 5 years.
Okay.
That is 10,000 SIP.
Okay.
And one Axis Small Cap Fund and one Axis Mid Cap Fund. I'm investing one in all in one fund house. Can this right, or can I stay in this fund or exit in this fund?
All right. Yeah, definitely. You can diversify in other AMCs also. Gautam, Axis Blue Chip, Small Cap and Mid Cap Fund.
Yes. So, Mr. Prasad, one, I would say that please look to diversify. Second, Axis Blue Chip has been underperforming. So, what you need to do is keep an eye out on the funds that you're looking at, staying invested in, and every 6 months see whether those need to be addressed, that needs to be changed, because each fund has a cycle that it goes through. I would suggest that look at ICICI Prudential Blue Chip Fund as a replacement for your Axis Blue Chip, because that's a fund that's doing better, and it's part of our research list funds we like. And the other two funds, I would say look at a Kotak Emerging Equity Fund to invest in, and then have a conversation with someone every 6 months, maybe a trusted advisor, someone you can connect to, who can tell you, basis their research, which funds to stay invested in. Because it's a long journey, you have to stay invested, but you have to keep an eye out on these funds that you invest in.
All right, I think that will be all. Thank you so much, Gautam, for being on the show and helping our viewers with their financial portfolio queries today. And we move on to the